they've taken all our intellectual property and our educational tools and more, and our direct foreign investment and all of our money, but they have not deviated one bit from the communist path. And now, is China going to invade Taiwan? Are they going to, play rough in the South China Sea? Maybe invade Japan? Are they going to do all these things? I said 25 years ago, you had people like Richard Haas of the Council of Foreign Relations and Jeffrey Sachs at Columbia University and others. They're smart people, but they were running around saying, give the Chinese time, cut them a little slack, don't worry about human rights. They all went to MIT and Harvard. They're going to be just like us, just give them time. And I always rejected that. I said, well, maybe they went to MIT and Harvard, but they went back there with a better education, but they're still communists. People kind of dismiss that, but it turns out that was right, that they've taken all our intellectual property and our educational tools and more, and our direct foreign investment and all of our money, but they have not deviated one bit from the communist path. And now they're no longer pretending to do otherwise. And Xi Jinping has said, we'll go our own way without the United States. So this decoupling between the U.S. and China, two largest economies in the world, is a very big deal. But the consequences are not limited to supply chain and economics. They go right to the heart of national security. And by the way, there's a theory, and I think it's a good one, advanced by Hal Brands at the School of Advanced International Studies. It's where I got my graduate degree in international relations and economics. And Michael Becky of Tufts University, also their School of Diplomacy. And they've advanced a theory they call peak China. And it goes as follows. So you ask yourself, is China going to invade Taiwan? Are they going to, play rough in the South China Sea? Maybe invade Japan? Are they going to do all these things? And people go, well, yeah, maybe, but they're not as strong as the United States, and they're not as strong as Japan. Their Navy's not as good, and they're going to wait. But from the Chinese perspective, there's another dynamic going on, which is if you think this is as good as it gets for China, it's not that China's stronger than the United States. They're not. But if you see China on a declining path, which I do for the reasons I mentioned earlier, and if you see the U.S. getting stronger, which I expect it will because of this College of Nations I described, then if you're China, this may be as good as it gets. And we saw this in 1939 with Japan, basically, even prior to that, 1936, invading China, and then running rampant in Southeast Asia, and then finally in 1941 attacking Pearl Harbor. And if you had said to the Japanese leadership in 1941, are you stronger than the United States? They probably would have said no. But this is as good as it gets. The U.S. is now going to ramp up, and if we're going to strike, we need to strike now. Same thing with Germany in 1914. If you said, was the German Navy as strong as the Royal Navy, the British Royal Navy? The answer was no. But they also felt that it was as close as they were going to get, and if they were ever going to go to war, now was the time. So you might have the situation where China says, we're on a downtrend, and they are. The U.S. is on an uptrend. It's a little funky. We have a lot of leadership problems, but we're probably going to be the beneficiaries of supply chain 2.0. You might, if you're China, you might say, let's invade now because it's not going to get any better for us. And that's a very, very risky world to live in. You'll do more research. I hope we get to do another interview, but this is all, there are longer versions of this in the book. It's not all about trucks and trains and cargo vessels. I cover that, but there are long sections on China and Ukraine in the book. So people who are interested can find out a lot more there. But let's go to your question about inflation in particular. And I have a whole chapter on this. So again, inflation's here. We all see it. Price of gasoline, eggs, milk, butter, groceries at the store, rents, electricity, home heating, fuel, you name it. Across the board, inflation's affecting everything. And it started really in mid 2021. So here we are, almost 2023. So it's been going on for well over a year. For the first 6 or 7 months, Jay Powell and, for that matter, Janet Yellen were like, yeah, we see it, but it's transitory. We know that story. Finally, November 2021, Jay Powell threw in the towel, said, okay, time to retire the word transitory. Now let's get to work. And they started raising interest rates in March 2022, and we're now up to Fed funds rate of 4%. They're going to raise them again in December 14th by another 50 basis points. We kind of, we're still a little bit away from that, but we know it's coming. The Fed, this is the no drama Fed. They tell you what they're doing in advance. So I always say you don't need a crystal ball to figure out the Fed. You just need to listen to what they're saying and believe them. So they're going to do 50 basis points in December. That'll get the policy rate of the Fed funds target rate to 4.5%. But that's from zero. March 1st, it was zero. So to go from 0 to 4.5 in less than 9 months, about 8.5 months, that's amazing. We haven't seen anything like that since Paul Volcker in the early 80s. Now, I know rates are not 13, 14%, but to go from 0 to 4.5, I can say in 8 months is a shock. Now, why is the Fed doing this? Well, they say they want to kill inflation. Okay, but there are two sources of inflation. Inflation can come from the supply side. What's called cost push inflation. Costs go up and they get pushed into retail prices and consumer prices, and that is what's happening. That's because of the supply chain breakdown, energy prices, shortages of goods, et cetera. So that's cost push inflation from the supply side. There's another kind of inflation that comes from the demand side, and this is much more psychological. It's when consumers say, they just have it in their heads, and maybe from objective data, that prices are going up, and so they change their behavior. They say, I was thinking of getting a new washing machine, but I was going to wait 6 months, but I better buy it now because the price is going to be a lot higher in 6 months. Or a car, suit of clothes, a dress, furniture, whatever it is, better buy it now because the price is going to go up. That demand side inflation is called demand pull. You're basically pulling demand forward because of in anticipation of much higher prices. And there's a huge difference between the two. First of all, one can feed into the other. This is what happened in the 70s. The inflation in the 70s started from the supply side in 1974 with the Arab oil embargo as a result of the Arab-Israeli war, et cetera. It then fed in to prices, but then there were monetary blunders where the Fed printed too much money under Arthur Burns and G. William Miller, two of the worst Fed chairs in history. And then that changed the psychology. And then it came from the demand side. And that's when, gold went from $35 an ounce to $800 an ounce, 2,100% increase. But it affected everything. I mean, I was starting my career at that time. And I worked at Citibank, and they, as International Tax Council, they used to just give us raises. We didn't even have to ask. They would just say, hey, here's another $30,000 or whatever, because they were afraid people were going to quit their jobs, and they did. So they would just give you a raise without even asking. That's how crazy it was. Now, so where are we today? Well, we're definitely getting the inflation from the supply side, and that's clear. But so far, it has not tipped into demand pull inflation. Consumer psychology has not changed. We're paying higher prices, but a lot of this is because demand is inelastic, meaning you got to pay the higher price no matter what. If you have to fill up your Ford F-150 pickup truck because you got to get to work or do your job or take the kids to school or whatever, and it used to be $75 and now it's $150 twice a week, you still have to do it. It kind of doesn't matter because you need the gas and you need the truck.